And we're live. We did it. Holy shit. What a trip it is to use this thing. I'm just waiting on the YouTube stream that I have up to come up, but I'm pretty sure I got this. Yeah, we're live. Okay, sweet. I need to transform this. Hang on a second. Fit to screen, and then this should show up nice. I think this is gonna show up. Oh, fuck. I need to transform this one more time. Fit to screen. 1920. Okay, so that's the problem. Output. That's on there. Okay. Now, why is this only showing part of my screen? Oh, it's cropped. Transfer. There we go. Okay. Bless you, young one. Okay, hello everyone. We're live. Sorry about all this. This has been quite the exercise trying to get everything together. Anyway, welcome to another edition of BSing with the Bear and Jamie. Today we have a wonderful show for you, which we've been waiting to put on since 2 weeks ago. Unfortunately, Jamie got the, how shall we say, what happened to you last week? Actually, I'm going to let you explain yourself.
I may have had one too many whiskies prematurely. I was practically having whiskey just before lunch. And then it got to about 2 o'clock and I was pretty bladdered and then I fell asleep on the sofa. So all in all, it was a great day. Not going to lie. But yeah, it's my fault. Apologies. I'm sorry, sir. Much sorry.
Well, you know what? Did you have a good time?
Yeah, I had a good sleep, to be fair, which is the main thing. Which has become quite difficult. But other than that, all good, mate. Yeah, can't complain. So again, apologies to you and Minnie Bear, because obviously Minnie Bear's a great one. So, but yes, glad to be back and carry on kicking it. How's the stream? Is the stream all good?
The stream is good. You are good. You've got your disclaimer up. Everything's ready to go.
Well, firstly, I just want to say that I have waited all day because of my terrible actions of last week, and a whiskey arrived at my front door at 2 p.m., Thomas. 2 p.m. And wow. I've been so good, and usually I even start having a drink while we start having a chat before we even start. And I haven't even poured it yet or opened the new bottle. So we've got 12-year-old Jura, nice Scottish whiskey. Never had it before, to be fair. So could taste like shit, really. Let's find out.
I've heard good things. Yeah, tell me what it tastes like. Is this more of a peaty Scotch?
So this is more of a smoky Scotch, apparently. Let's have a taste. Oh, I just got whiskey down me. Too excited. Right. Cheers, my friends. I wish you could be drinking with me. One day we need to do this together, but we can do it in person and get drunk together rather than over the internet. That'd be so awesome.
I long for the day when that happens.
You know what? It's not too bad. It's not my biggest cup of tea. It's really smoky. I wasn't expecting it to be that smoky. But it's not too bad whiskey. So, anyway, sorry. I digress. Apologies, sir.
Well, does it taste like campfire?
You know what? It does a little bit without the marshmallows. So, yeah, it's quite nice. It's quite smooth. It's all right. It's not too bad. It's not up there. It's not there. It's no Glenmorangie or Talisker.
But Jura's really good.
Yeah, it's all right. Can't complain. Good. It's not too bad. Maybe I just don't like good whiskey. Maybe I like proper dirty whiskey.
It just, maybe you need to have a cup of tea with it.
Why would you ruin the cup of tea, sir? Don't bring the cup of tea, just.
You're so British, that's hilarious.
No, I'm just kidding. Got to play the stereotype.
I know, I feel you.
All of you Americans, come over, spend your money. We need this economy moving.
We all need to start traveling. I'm sure everyone's getting kind of like, stir crazy staying at home. I actually had a clandestine haircut performed on me today. My hairdresser came over and gave me a haircut on my rooftop, and I feel like a new man. It's
Right.
liberating.
Oh, nice one. I've kind of not even bothered waiting for that. I mean, here we're still in lockdown completely. The most we're actually allowed to travel is 5 miles, no more than 5 miles from where you live. And nothing's open. So I've just got an electric shaver now. So I've just been shaving my head every week.
Yeah, why not?
Nice
That's
and
so much
easy.
easier. If I didn't look like a joke with my head shaved, I would do it.
Yeah, my problem is that I look a little bit too thuggish. So a bad man be looking at me. You get me?
Yeah, kick
And
his ass.
no, I don't. Okay, sorry, good sir. I do apologise. It's just my look that is deceiving you. But yes, anyway, sorry. Shall we crack on?
Yeah, I guess we should get on with the show. Why don't you share with us how we are not here to give financial advice?
So we're only here to give whiskey advice, not financial advice. How awesome! Sorry, I'm getting distracted. This presentation is for informational and educational purposes only. The material provided should not be interpreted as investment advice and endorsement to sell any stocks, ETFs, futures, options, currencies, and the cryptocurrencies or shitcoins, or an offer to buy, sell, hodl, or trade stocks, ETFs, futures, options, currencies, cryptocurrencies, and leprechauns. No liability is accepted for any loss, whether direct, indirect, consequential from any use of information on this presentation. But that's about it, to be honest. People can read the last sentence themselves. You got your homework. But to be fair, do you know what would be really good? If we made this professional, we should try and get free whiskey.
Oh yes, everyone sends us whiskey.
Just get sponsored by whiskey brands. I think this is the only way.
Do you think we need for that?
3?
That's what we got right now.
No, yeah, exactly. Ka-ching! No, I think we're gonna we need to up our game massively. Yeah. Don't the Chinese use fake bots? Can we not use like the WeChat do bots and stuff? Don't they? Can we not just do that?
I guess we could try that. I don't know. I'm not really good at that.
Anyway, shall we crack on? Do you want to start off with what you've seen over the last, I suppose, week, 2 weeks, whatever, in the global markets, I suppose, to begin with?
Yeah.
Standard procedure.
Let's do a quick roundup. Let me share my screen here. Stop screen sharing and your entire screen. Share now. Yeah, baby, what do you want?
What do you want?
I've got my daughter next to me, and she's like,
Was that crypto?
she's like, talk about crypto. Okay, this should be on the YouTube page. Let me just make sure this looks okay. Full screen. Okay. All right, so let us. Oh no, is this going to give me the same problem again?
Oh, hang on. Let me stop presenting, and that might help.
Present entire screen.
Oh no, it says I'll stop it completely.
I think it's
Yeah,
working now.
You're all good. Crack ahead, sir.
You can see it?
Let's have a
You know
look.
what it is? I think it's OBS that keeps doing this. Yeah, this is OBS. Okay, there we go. This should work now. Okay, I don't know why OBS keeps doing that. I'll have to figure that out. I thought I figured it out. All right, anyway, let's jump in here. First things first, S&P, what a wild ride we've had. Let me bring up my equities here. Let's take a look at a SPY chart on the daily. I mean, I don't really want to talk about how this thing kept riding up. I mean, everyone by now, if you're even interested in stocks, you know that this was mainly caused by retail euphoria, mainly caused by the promise of the Fed to support markets, to add liquidity to the system, because, well, it seems like the U.S. economy is now largely based on the stock market. So if the stock market's going up, the U.S. economy's doing great and everybody's happy. But if the stock market's on its way down, well, like yesterday, you have tweets coming out from Trump and Mnuchin that say, oh, we're going to stimulate as soon as we can, and we're going to do whatever we can to support the economy. Well, it's hilarious. It's almost like clockwork here. But into last week, things were just getting nuts. So, I mean, I had trades on my Twitter account that I did really well on. One of them was Exxon. The other one that I had on was a silver trade that I took off on the paper trading account, put back on the real account, did well on that. Just a bunch of stuff was going on over the last 2 weeks. It was really one of the most intense 2 weeks of trading, and realistically, between Monday and yesterday were the real stars. I mean, I haven't seen trading like this in a long time. But as things were going parabolic, everyone's blaming the Robinhood traders from buying things like Hertz to Chesapeake and all these other bankrupt companies. You know, Hertz declares bankruptcy. Carl Icahn sells down here around 40 cents. And then you've got the Davey day traders of the world. If you don't know who Dave Portnoy is by now, let me tell you, you're missing out on a wonderful show.
Stocks only go up.
Stocks only go up.
They only go up.
Yeah, this guy he is entertaining, a brilliant advertiser. This is him. You got to watch this guy. I mean, I think he like pumped a stock, and he might be inevitably getting investigated by the SEC for what he did. It was almost like a pump and dump. But nonetheless, Hertz was one of the ones he was talking about. This thing went from 40 cents, right? This is a bankrupt company going all the way up to $6. And then Zero Hedge comes out and publishes, they're like, well, if Hertz is going bankrupt, they should just offer their shares up so people can buy them. And then they can come out of bankruptcy by raising the money necessary. And sure enough, today, Hertz freaking goes out, and it's like they read Zero Hedge and like, we're offering a whole bunch of shares to sell to investors. It's like, what the hell? They're raising money to keep themselves take themselves out of Chapter 11. I mean, you really, there's a saying, you can't write better fiction than reality, and it sure seems like we're in that right now. I mean, things like Hertz, like we just talked about, is one of them. Yeah, I know. It's ridiculous. Can you believe bankrupt companies can go up almost over 10 times? Same thing here with Chesapeake. Chesapeake is an energy company. This thing rose up to $77 and then gets smashed to the downside after, like, this big green candle happened, and then at the close, right? This thing's trading at $12 2 days ago, goes up to $77, and then after hours they announce they're going bankrupt. It's like, if this doesn't scream retail euphoria, I mean, like, oh God, this fucking thing is doing it again. There we go. I don't know why this is so bad. All right, I'm gonna have to keep an eye on this. So Hertz is just like or Chesapeake up and down. These are the kind of stocks that we're seeing doing stuff like that. It really is just wild. Wow. Okay, so what else is going on? So I wanted to talk about the S&P and what happened over the last 2 days. I think what happened in the S&P was this buy the rumor, sell the news situation. The Fed came on Wednesday. Everyone was expecting them to be accommodative. I mean, I don't think anybody was expecting them to raise rates. They came out and said, not only are we not raising rates, we're not even thinking about raising rates, and we're not even thinking about raising rates. So they expect rates to remain near zero until 2022 is what Powell said. I actually thought it was funny. There was a picture that was tweeted out of Powell sitting at his computer. Let me see. They said, caption this. And it's like people were putting funny shit. Like when Powell checks his Apple position before the announcement, we're like, yes,
I saw one which was like, how do I sign up to this Robinhood?
Right. So everyone's blaming the Robinhooders, the retail traders, the Davey day traders of the world for pumping the stock market. And all the professional finance guys are like, this is crazy. You guys are so stupid. You're going to lose all your money. They were so mad because they weren't participating. They had to go and chase gamma, essentially, because the more that the stocks went up, people were buying calls, the more that the dealers had to go out and hedge the calls that they had sold. So the way that they hedge their calls is they go out and they buy stocks. And that's how they hedge it out. So they were perpetuating this rise in the stock market, and they're all complaining about it because they're the ones that are getting stuck here. And you know what? I'm not going to comment, but it's entertaining because right after the Fed, stocks started to dip a little bit. And then obviously everyone knows what happened yesterday, just absolute carnage. You've got headlines like COVID second wave coming, you name it, any bad headline the media could come up with to explain why stocks dropped after, well, but Powell said he was going to be accommodative. Yeah, that's great, but that's what the market was expecting. Very simple, buy the rumors, sell the news event, and that's what's happening here. So, I mean, the question remains, and of course the most important question always is, where are we going from here? And I think that it's a really interesting place that we dumped at. I mean, if you take from the highs, the fib trading range from before we crashed, I was really expecting, or at least looking for, price to go back into this 3,300 level on the S&P, but we didn't quite get there. We did get to 78.6, just a little bit over that. We kind of like blew off. I even tweeted out the other day, I was like, blow off top. And I think that was the day of the top. Where's my, I don't even know if I need to prove this. Whatever, go find my tweet. I'm either right or wrong. I don't care, right? That's the whole point about markets is you need to have a strong opinion loosely held, and that's exactly what I had on some of these positions that I'll go over. But if you look at the S&P, 38.2 is right around 283. Trading at 301. I think we need a little bit more sideways, but I mean, today, this reversal, we opened up green, up almost 50 points, and then obviously the news came out, or I don't know what news came out.
We opened what 2.5%.
Yeah, it was like, oh, this is actually going to recover.
Insane.
But the real story is the VIX. I think we can understand what's going on a lot better by the VIX. The VIX spiked. I mean, anyone who's got those $30 calls that I was like, I'm hodling, those things ended up going from, I think I paid $4.40 for them. The day before Powell spoke, they were worth about $1.50. And I was like, you know what? I'm just going to let them go. I've already lost 3/4 of the position. Usually I blow things out at 60%, but I didn't sell that position. And this thing, I mean, yesterday was just absolutely nuts. Took off. The calls went from being worth $1.40, $1.50 to, I ended up selling 2/3 of my position at $8.40, and I think they were worth like $11 at the close yesterday. So I've got a third of the position still on the books, and it looks like this thing made new highs today. So people needed to hedge their downside risk, and I think that dealers were chasing that protection on the VIX, and that's why this thing is still spiking. I think we can get a really good idea of what's happening just by what happens between the VIX and the SPY. If the VIX doesn't want to continue going higher over the next, call it, week, and we just kind of settled, oh, that was a fun time. If the VIX just kind of settles down and retests this moving average cross, but you see it sink lower, because look, what happened here is that price structure left a nice big gap for us down here. I mean, I don't think we necessarily have to go and retest that tomorrow, but inevitably we will be back to those levels. So you just have to keep that in mind. I mean, do I think the VIX is going all the way back up to 78.6? Probably not. That's 70. I think that it's probably reasonable to expect this thing to go to at least 45 to 50. That's really my short-term target. I've got that. It's funny. I think I have 5 days left on the contract. It expires next week. So I'm just going to let this thing go. Maybe
run it.
Yeah, I'm just going to let it run. This is kind of where I expect this thing to go. And I'll just keep my eye on it. So those are the most obvious things to be going over here. I mean, we could look at the Dow versus the Dow Transport. This is all just going to look like shit. It really doesn't matter. I don't know. I think that I'll go over some positions that I've got on, but I'd like to hear from you. Like, what are you taking away from this? Do you think this is the big drop? Do you think we're in for, a stark correction that, people are realizing, holy shit, the case count's going up and all these big states that are reopening, it's inevitably going to happen again and the economy's going to take a hit because of it? I mean, how dumb, what do you think?
Well, thank you very much, Tom. To be fair, I mean, it's more basically of what you've said. What I found really interesting, I mean, we could talk about, because we haven't done anything for the last 2 weeks, is that, am I presented now? I honestly don't know what's going on. terrible.
Yeah, you
I've
should
had
be
a
on
few
there.
whiskey. So yeah, so I mean, quite a few things did go on, but one thing that did catch my attention before Powell actually spoke was the OECD report. So for people who don't know, the OECD come out with a report more or less every quarter, and they talk about basically what they're looking at. And I found this really interesting. So more from a price action perspective. So in the morning of the day, because this was actually released on the same day that Powell actually spoke, the market was up quite considerably. And then as this report came out and people were processing it, the market started to move down a bit. It was still positive, but the market still moved down a bit. Now, whether this has got people scared because basically the projections that was within this is the impact that a second wave could give. So basically it would just harm more or less a quarter or minimum 2 quarters and a few more percentage points in terms of GDP. So I think this report, for people who haven't seen this, if you just go on OECD.org, it's literally at the front. So I found that really interesting of when this came out. Now, then, like you said, Powell spoke. So Powell started speaking away, and I think some of the things that obviously he spoke about that I've put about here is that one thing he kept on referring was that he was waiting to see what data has to say in the coming months. So it was more of just a reaffirmation of basically what's going to be going on over the next, couple of months until basically these uncertainties actually come out. As you said, with the interest rates, so I think it's this one here. Yeah, so this is basically something that they've brought into line where the FOMC participants actually basically kind of like voting of where they see the interest rates going, and more or less everybody agrees, as you said, that it goes basically with the interest rate at 0.25% until the end of 2022, and then the long-term out projection would be 2.5% is the median. I definitely can't see that happening 2.5%. I mean, well, I suppose there's always that case that everyone's talking about is the deflation and inflation. But for now, all we need to concentrate about is what's going to be going on for the next week or month, never mind the next, in the next 3 years. So that was quite interesting. And then as well, at the same time, he was talking about, a long road ahead. He kept on saying these statements that it's going to take some time, but then actually also said that it's not like the Great Depression. So I found that quite interesting. And then, as you said, the price action started getting all topsy-turvy, and we started seeing a lot of price action. And like you said, it was like buy the rumor, sell the news. And then we started going negative. We started going positive as the report came out, and then as Powell started speaking, we started to go negative. Now, I found this really interesting. I mean, from a broader perspective, a lot has been going on. We're starting slowly to get a lot more data from, for example, China. I mean, at the end of the day, China was the first country to reopen, and there's still data to suggest that things aren't still back to normal in China, even after, I think it's nearly 3 months now since everything started going a bit crazy. So I think this run-up has been really good. I think it's been a really good trap, personally. I mean, as you see, like, if we look at the S&P's just literally rallied beautifully. And now we've got to a point where, okay, well, it seems like as we've started to get more data coming out and trying to understand, at the end of the day, how consumers are going to behave. Because if the consumers are going to be coming out and they're not going to spend, or they're going to be really hesitant because of the virus, then there is no way you can have the same, basically, revisions of what analysts have put for companies within the S&P for the next 2 years. You're going to have to put it back. So I think this is a perfect time for the market to actually go down from here. I think today was, I messaged you earlier in the day and I was like, I can definitely see this retracing by the end of the day. And sure enough, we're at 0.66% from 2.7, 2.5% from the start of the day. And I think that was a great trap because retail traders, as you say, have been a big part in this. They've been making money, and the smart money, not much of the smart money has actually been making money. So I honestly think that depending on Monday, how we actually turn, and there's two ways this is going to go, and this is all going to be down to over the weekend. So also just a pick up on China as well, because we need to look at China simply because of them being one of the first countries opening. So they're kind of like one of the leading indicators to see how the US might react, the US consumer. So China, two data points which I pointed out, which I found quite important, was the German exports and the Chinese imports. So the Chinese imports came out first, and I believe the Chinese imports came out at negative, I think it was negative 16, 17%, which is pretty terrible, to be fair, considering that now it's been opening up. So that wasn't good. And then when the German exports came out, I think it was like negative 24%. So, I mean, for people who don't know, Germany rely heavily on the Chinese to buy their products, basically, especially from an industrial perspective. So this shows that the Chinese economy isn't, kicking back straight away like everybody's expecting. Consumers going to go out and spend whatever. But it's just clearly not happening at the moment. So I think the market's been jittering and jittering. Obviously, we've had everything going on over the last few weeks within the US. I don't think that has really mattered too much. I think the market kind of dismissed it and wasn't expecting it to go on for a long time. But yeah, and then from a virus perspective, I mean, if we have a look, so this is basically, personally, I think what the play is going to be over the weekend to then decide whether the markets are going to move lower or maybe go sideways. If the markets go up from here, I think that's going to be really interesting, because I think it's going to be really difficult for the money to really flow in long when there's still so many uncertainties. I mean, we keep on talking about the uncertainties that keep going on. I mean, there's still so much going on that we still don't understand what's going to be happening. I mean, we've never been in this situation before. But just one thing to highlight, which is Texas. So Texas is one of those ones that has been making higher highs. And if you can see in the green here, you've got the 7-day moving average. And that's been going higher and higher. And then sure enough, I think it was 2 days ago, we got all-time highs in terms of daily new cases. And we've got daily new cases highs, I think, in over a dozen states now in the US. So personally, for me, I reckon, I mean, without obviously saying, this was going to happen, but I personally think we need to now start, I mean, as you can see here on the S&P, 3,000 or 300 on the SPY is a really important level. So this is going to be a battle, I think, for a while. So if we go sideways here, I cannot be surprised. Then we've also got all of the, I mean, here you've got in quite a faded orange, you've got the 200 MA, you've got the 200 EMA and the 50 EMA starting to cross, and then the 200 MA and the 50 MA still quite a way apart. But I think we could go sideways here for a while. We could even go up. Who the fuck knows? But I mean, I think the biggest catalyst that you're going to see, if you really want to see a downtrend, and the only place that I think is going to create a downtrend is if we start seeing rising numbers in New York. So personally, to me, New York is the catalyst over the weekend. If we start seeing cases rise and rise substantially over the next few days until the market opens on Monday, for me personally, there's without a doubt that the market will more or less go down. So, I mean, that's the way I'm looking at it. Is that, everything that's going on, I think the market's starting to comprehend that consumers aren't going to be going out straight away. They're going to be pretty hesitant. And when we heard Houston today are saying that they're considering maybe going back into lockdown, which is in Texas. So I think if we start seeing a rise in cases in the city that was hit the worst out of this, then there's no doubt in my mind that we're going to go down. Like you were saying with the VIX, I mean, the VIX has gone up, going above 30 now. That's creating a really big problem for portfolio managers. So it's going to be really difficult for them to know how to actually try and read the situation going over the weekend. So yeah, I mean, that's the way I stand for the moment. New York goes up in cases over the next few days or even the next week, then there's no doubt in my mind we're further going down. I mean, the question is, if you're a buyer here, like on the S&P, if you're going to be a buyer, I mean, the way I'm seeing it is if you're a buyer here, you're basically saying that over the next like few months coming. Like by the end of the year, consumers will be back to normal, and I can't see that happening at all. There's too many variables going on. I mean, the PPP program I think does it end in July? So I mean, that's going to be a huge catalyst to see how many people can actually afford to live. So I mean, that's the way I'm looking at it more or less. I mean, if you want to try and look for ways of how you could have spotted this, I mean, I use a consumer sentiment indicator, but I think first of all, I won't be able to show it. But the consumer sentiment was showing that dumb money was basically incredibly confident, and the smart money was actually getting quite like pessimistic. That started showing signals, and then one big signal as well was the put call ratios. So I mean, if you look at the put call ratios here, the put call ratio, this was on the 8th, was literally, I think this was the lowest it's ever been, I think since like 2014 or something crazy. So this basically shows that there was a crazy amount of calls in comparison of puts, and sure enough, it's now back up to 0.994. I'm basically looking at it to get to around 1.2 to see if when we get to around that area to maybe become neutral in terms of portfolio. I'm a little bit more negative here. Like the portfolio's it's more like 70-30 at the moment to the downside. So yeah, troubled on for quite a bit there, but that's about it, mate. That's what I was seeing in terms of my own positions. I know you were going to show yours, so I'll quickly go over mine. I've been in this name for quite a while now, and it's just not going down. A lot of manipulation going on. This is being GSX, it's a Chinese company, education company online. Just honestly, there's so much going on with this. Just trying to be patient at the moment. Really kicking me out. I've had to really be patient over the last couple of weeks. We'll see how things go on this one. It'll depend on whether this could get investigated. It might not. Or I could be completely wrong. So, I mean, if we go above, 43.64 here, I'm just going to have to get out. It's not worth booking a huge loss. And then another one, I was probably too early on this one at the moment, still in the position. So this is a subprime auto loan company for people who don't know. And yeah, again, in too early. I honestly thought the rally wasn't going to be going on for that long, and it's got the better of me. But then, fortunately, being hedged, I've been hedged a couple of positions now. So NEX is a coach company here in the UK. So that's only down a tiny bit, but it's good to balance the portfolio, to be honest, when you're getting in this type of environment. But yeah, definitely caught me with my trousers down my ankles. So we'll see how those positions get on over the next couple of weeks, to be honest. But yeah, that's about it from me, sir, on the stock and broader outlook front. Yes. Are you there? No, yeah. So I mean, from like GSX, so it's just with both of them, I'm just doing the shares. GSX, I've started doing the shares simply because with everything going on, especially with the options, if this ends up being a fraudulent company, I don't really understand how the options would move in that type of environment. So I don't really want to risk it. But with volatility being so high over a while, I've honestly just kept to shares, to be honest. I don't really want to be taking too much risk, and with so many uncertain things and the market's moving so crazily, I've honestly just kept a very simple shares portfolio of either borrowing the shares and shorting it or going long the shares. So yeah, keeping it nice and stable more than anything, rather than going crazy on a leverage front. There's no need, to be honest. I mean, if the market goes down 50%, I'd be more than happy if I made 50% this year. I don't need to have crazy risk. It's just trying to keep the risk as low as possible in quite a volatile environment. So that's about it, mate. Yeah, that's the way I'm looking at it. Yeah, man. So yeah, it'll all depend on what goes on over the weekend. I think China have got data coming out on Sunday, so depending on that data as well. But I think it's all down to, well, the market, as you said, the TV started turning more to Corona once the BLM movement had calmed down a little bit. So yeah, we'll have to see on that front how that gets on over the next couple of days.
Yeah, I mean, I'm just trying to understand how this is going to continue to unfold. I'm just I'm a little different than you are. I mean, it seems like we've all become perma bears through this market, and I'm just going to move to my screen. I mean, I like what you're doing. I think that everything makes sense. It's just like this. It just doesn't seem to be following a logical course of action. You know, the Fed just is going to do whatever they can do to keep things propped up. And call me crazy, but I think this might be buy on dip. I'm not going to be buying here just yet. I want to see, for instance, like if I make this S&P chart full screen, I want to see if we pause here. Like I would actually guess that we're stalling out at a 23.6 level, and we are. You know, this is really where I see the first stop for markets, especially most stocks here. I mean, do we pause here and then continue moving higher? Because while I mentioned that gap on the VIX, you know, that corresponds to that gap on the S&P. Do we need to come back up and fill that in, trap a bunch of those crazy Robinhood traders thinking, you know, stocks only go up and they can push the market higher? I have a sneaking suspicion that we're not done visiting these highs. You know, whether that means that we go straight up and retest that, or whether that means we go, for instance, down to here. You know, there's a nice kind of, there's a gap right around here at 290 on the S&P. You know, maybe we do something like that. I think it's going to be really hard trading going forward. I think we're going to see bad data come out, but I think the market's getting a little bit immune to this kind of, you know, COVID's coming back. I don't think they're going to shut people in. You know, you said that in Houston they're considering doing that. I think the government wants to kill people. I really don't think they give a shit about anyone.
I completely agree with you, to be fair. I can't see them going back into lockdown simply because that would just kill everything. Like the markets, it just turn toxic. And then, yeah, I mean, your bullish case scenario is the Fed, and that's a good enough bullish reason, if anything. I mean, the Fed are going to try and do things, but either this is going to, as you say, maybe go sideways for a while. If it goes up, I genuinely can't see it going up too much, simply because of the uncertainties. You get rid of the uncertainties, I'm all game. Somebody comes out tomorrow, Moderna comes out and goes, yeah, we've got a vaccine ready. It'll be ready for everyone next week. Then yeah, I'm a bull. But with the amount of uncertainties at the moment, it's just really difficult to even just to join the ride up from here. But I think we'll more or less get our answer by either the end of the month or the start of next month, simply because we're going to start seeing where the money's going to start flowing. I mean, we can't forget, what are we now? We're the 12th, right? Yeah, 12th of June. So we're getting towards the end of the second quarter. So when we get to the end of quarters is where we're going to start seeing money and where it's going to be allocated. So yeah, in that case, I think we're going to get a lot of movement. So I think we're going to have a lot to chat about over the next couple of weeks, which should be fun to see where we're at.
Yeah, it's I don't know. It's crazy. My inclination is that they're going to have to provide more stimulus to these companies. You know, even if they do keep things open, I mean, people are going to look at the case counts. They're going to look at Florida. They're going to look at Texas, and then it's going to happen in, you know, every state that you're just going to see in the news. This case counts rising, the death counts rising. People are just not going to go out, and it's going to impact businesses. And I think they're going to have to either start a new PPP program or roll out another round of stimulus checks to everybody. I think it's probably going to be both. And I think because it's an election year and Trump wants to get his pants back in his bunker when the riots get bad so he can hide, that it's in his best interest to have some more hand-signed checks going out to people. So I think that's going to happen. And I think that's going to... What's that?
It's so difficult. I mean, if you got everybody, let's say if the checks do come out and they spend loads, the hardest part is how are you going to get consumers to spend? And I think that's the biggest question mark, because I mean, I don't know about in the US. I don't know what the sentiment's like over there, not being on the ground, etc. But I mean, here in the UK, people aren't stupid. They know that, some people aren't going to be coming back to a job as soon as our furlough scheme ends. I mean, at the moment, the furlough scheme, I think, is going on till October. So, um, I don't know what is the general sentiment when it comes to jobs in the US. Do people truly believe that when they get back they're going to be having a job, or are people pretty pessimistic and they're like, "Whoa, I better start saving my money"? Because that's what it comes down to. I mean, the consumer sentiment indicator came out today. The University of Michigan consumer sentiment indicator came out, and it was quite bullish. But then I'd be bullish as fuck as well if I could just leave my house and go wherever I wanted, at least for once, which I can't do yet. So I don't know. It's until we start getting, because I mean now what New York's open, some of the shops, etc. So until we start getting more and more data coming out of people spending, but with this virus still going on, if people are still cautious about the virus, especially the people who are vulnerable, naturally they're not going to go out and spend, etc. So I think that's what it all comes down to. And then I think, I mean, we're like, uncertain with everything ourselves, but it must be horrible to be a fund manager right now, because to know where to put your money, at the end of the day, the beauty for us is we don't have to put all of our portfolio into things. We can just sit back, relax until things are certain, and then we can actually start trading, etc., in whatever we want, or investing in whatever. Whereas a fund manager, I mean, coming into this weekend, what do you put it in? Do you put it back into a stock that, for example, has done really well within a quarantine environment in lockdown? Or do you go for the more, let's say, riskier stocks that are more, consumer discretionary, that have, shops that have been closed, etc.? So it's really, really difficult. I don't know. I'm really dubious of how this is all going to play out. Maybe I am a little bit, I mean, my portfolio shows that I'm a little bit more pessimistic. I mean, I am more 70-30 on the short side to the long side. So, yeah, I mean, even myself, I found it difficult, even just, I mean, I'm not even all in on my portfolio. I've got plenty of cash on the side, but even I'm been like, well, shall I cover it? Even if I just cover it over the weekend. So, yeah, it's just, again, still uncertain. But then this rally has put even more uncertainty for people and made them even more erratic, because people are scared of missing out. But I think it is all just a case of just sitting on your hands at the moment. But yeah, I mean, I suppose I'm being biased. Let's go down from here.
I think to answer your question about jobs in the U.S., I think it's a mixed bag. Some people are already laid off or furloughed and they're on unemployment, which, by the way, here, the extra juice that the government's giving to everyone on unemployment, which is an extra $600 a week, $540 if you take taxes out. I mean, that's really keeping people alive right now. And if you take that away, you're essentially taking away their ability to survive. That ends at the end of July. I think that they want to extend that program, but the Republicans are against it. The Democrats are the ones that are pushing it. The Republicans instead have proposed some kind of bonus for finding work, which would be to the tune of about $400 on top of your normal salary. That still has to be pushed through. It's really bizarre, man. Like we've become such a socialist state at this point. I don't think most people even realize it. But the point being is that if people aren't already laid off, even if you do get put back to work, you're only going to be working for as long as your PPP program keeps your employees going, or for as long as the business can keep its doors open, before realizing, like, if you're a restaurant, you're only allowed to have 10% of your normal capacity come in. And on any given day, a restaurant's profit margin isn't usually that high. And to cut out their earnings by 90%, I'm sorry, you don't stay open for that long. I think, most retail stores are probably going to be just okay as long, until at least July. But there's a big problem where people are saving money because they are expecting things to get worse. If you look at the credit card data, credit cards release some information that instead of people historically being in debt over the last couple of months, they've paid down their credit card bills some ridiculous amount of money because we saw the savings rate go up over the last few months. So people are preparing as best they can, and I think that impacts the retail side and will impact it even more into August, September, if there isn't more government stimulus that trickles down. But the funny thing is, the $1,200 that they gave out to everybody, if you were making less than, I think it was 75,000, they correlated. There was a study that came out or something that Robinhood released that the average deposit into Robinhood and Coinbase, by the way, was $1,200, and right around when that stimulus went out. So all these people are pumping these stocks with their $1,200 stimulus checks. And you can see like people were making crazy money just buying like out of the money calls, and they were cashing in, making 10, 20, 50 times their money buying these stupid, crazy bankrupt stocks. I mean, just it's wild. And that's how people are making their money. They've gotten tired, or they miss sports betting, so instead they've come to the stock market. And I think that's really what's happening, what's driving this thing higher. Now the question is going to be, are people washed out from this latest sell-off? Did people buy themselves enough time on their stocks, on their options? Did they have stop losses set? You don't really know. But that Davey day trader is sure going to keep his army of stocks only go up guys going for a long time. So anyway,
You're right though. I mean, it's entertaining to say the least. I mean, I've been having the open of Bloomberg in one ear and then Dave in the other ear. It's hilarious. Just it's like having two. It's like the smart money, dumb money indicators on both sides to see what they're both saying. Oh, it's hilarious. I mean, it's crazy the amount of people that are participating, and that's what scares me even more because. People, the average retail trader doesn't know how to, how to actually, they don't understand risk management. They don't understand how to hedge positions. They don't understand shit. All they know is, oh yeah, if I buy out the money options, I might be able to make this much. And they're just going to get wrecked at the end of the day. So I don't know. I suppose one thing that we can hope is that, there's nothing better than if retail traders start moving their volume over to crypto. What do you think?
I don't know if it's right. We're ready to jump into crypto, but I think they've lost interest for now. I think that the participation in crypto has just become intertwined with the movement of the stock market. I mean, I tweeted out this crazy chart correlation between Bitcoin, Ethereum, and the S&P. Let me see, where did I put this? Here it is. So this was this morning. Here's the Ethereum chart. Here's the Bitcoin chart. Here's the S&P chart. I mean, they look pretty much the same, minus this crazy up and down action here. But, I mean, even on Fed Day, I don't know. I don't think anyone's going to be pumping Bitcoin or Ethereum anytime soon if stocks are selling off. This was like, it was interesting because the stock market hadn't sold off yet. The stock market did sell off, and then crypto followed. It was almost like there was a pause. People were too busy watching stocks, and they're like, oh shit, we got to go and do the same thing in crypto. It's like the algos aren't programmed properly to do the arbitrage or whatever needs to be set up. You can't really arbitrage the stock market with your crypto.
You're right though, man. Like it happened as well. I mean, we were even talking when the FOMC meeting was going on, and we started seeing the fuckery around the FOMC meeting with crypto and the market as well. It was practically the same. So this is again more data to suggest that we don't know how crypto works in a recessionary environment or in a downturn within stocks and the broader markets. But it's more data to suggest that once the VIX starts getting into a very volatile scenario, is that BTC is following. It's just like any asset. So for people who I mean, like you say, people who are saying, BTC moon from here, they're going to get fucking trampled on. I personally think that, if the market dips really badly on Monday, the BTC it's bound to follow. It's going to follow. I mean, we can only see that from what's gone on over the last couple of months. And I mean, we only need to look at how volatile BTC was back in the end of Feb. And BTC was hammered in comparison of the broader market. So I think that's it's a massive warning for anybody who's trading BTC at this point is that you're going to have a view with the VIX now in the late 90s, early 40s. You've got to have a view on the stock market before you even trade it. It's as simple as that.
I agree. I think you're totally right there. The correlation is no doubt present at this point. I mean, if you look at Bitcoin on a daily, you know what, let's get to that in a second. I just want to go over a couple of things I'm interested in trading and maybe talk about the paper trading account a little bit. Let's see. So let's bring up this disaster of a paper trading account. It's kind of difficult when I'm not hands-on in this thing, so things don't look good. I mean, we're like down $2,700 on this GLD. We're positive on this Edison. I don't know how, but that looked like a good play 2 weeks ago. Let's see what that.
Sorry, what's Edison? Sorry, that made me laugh. I was just thinking.
That's an energy play.
That's my idea. I came up with that.
Did you?
Oh no, sorry. I was thinking about Thomas Edison and stealing Tesla's ideas. But...
Oh yeah. Well, speaking of Tesla, what about Nikola? Did you see that SPAC? These like special interest in investment things that went from VTIQ to Nikola, and then that thing is another one of those crazy Robinhood ones that went from like $10.
There's so many of them. Honestly, I was looking today. I was on. I was actually having a look at different screeners and looking basically for any company that has a market cap, like a really low market cap, with the lowest amount of volume, and anything that has a share price of $2 and below. And I was looking at all of them and going through all of them on robintrack.net. So for people who haven't gone on that, it's a gem of a site. And I mean, I was going through each one, and every single one on more or less every single illiquid stock on an American exchange had, like, every time when there was a lot of holders on the Robinhood's robintrack.net, was basically a positive movement for every single illiquid stock. It was like, it's crazy. I mean, I was thinking about it, and then I was having a look at them today, and I was like, no, this is too risky. I mean, if I'm going to do this, I may as well just do shitcoins on crypto again. Like, it's just as volatile, but it's crazy. It's absolutely crazy.
It's fun. It is. I mean, I just picked. I needed some like the other day, I tweeted out that I bought puts on Ford, and that's because things were just so crazy on Monday and Tuesday. I'm like, this cannot possibly go on. You know, you had indicators like the VIX. The thing that really tipped me off, the reason why I took this position and these short positions, was mainly because the VIX just stayed elevated. I mean, right around down here, right? This was like early part when things were still going up in the stock market. The VIX wasn't going down. You know, that was the telltale sign for me that something's not right. Nobody believes this rise. It's mainly retail participating. Retail doesn't have enough firepower to avoid something like an institutional shit on their faces. I think they definitely have the power to keep this thing going, but when the institutions and the real traders come up to play, they're like, all right, kids, it was fun while it lasted. Now you get a taste of what it's like to be a pro, and then bam, they smack it down. It was like, welcome to trading, motherfuckers. A really crazy day yesterday. But this is, you know, I took this Ford position because that's exactly what I was thinking. You know, you look at the VIX, you look at some of the internals, there was all these fake movements. You look at yeah, man, Ryan, it's been great. All these doubles, triples, it's fun. You know, you look at the 10-year futures, I mean, that thing broke down. So everyone's like, oh, well, that means that everything's healthy. And then this thing spikes back up again. I mean, look, things are wish-washy. It's really trying to give people, exactly, yeah, Ryan, VIX wasn't falling. That was kind of the biggest tip-off for me. But anyway, let's jump into these trades. I've got this Edison. I'm surprised, you know, I actually really like this now, because if you look at how this thing did not collapse, I'm a fan. We got filled right around here. I guess we probably could have taken profits at this. Wow, this thing went all the way up to $77. So this thing is trading at 74. We probably could have made 50% on this position if I was more hands-on. The GLD is a disaster. This is expiring next Friday. We've got the 165s and we sold the 172s. Right now GLD's at 163. I think there's a chance we might be able to just sneak right into that, a little over 165. But the problem with that is we paid 385, so we need this thing to be about 168. So I think we're kind of screwed there. The good news is that we're going to make the money on the call sell. So this won't hurt the sale of the call. That won't hurt just as badly, but we're still down $2,700. Starbucks, this thing we have until next week. Also, $70 put. If the stock market sells off more, this thing could very well go in the money, but this thing still sucks. We're down only $100. We paid $239 for this thing. I almost want to roll this. Maybe just look at next week. What is June? We have until July. Oh, good. We have more time. I'm going to keep this on. The GLD, I don't want to roll this. I think I put too much in it. It's kind of just, why do I have this in my lap? That's weird. I didn't even know. I've got like another headset in my lap. I didn't even notice. I'm like pulling some string out of my crotch. S&P. Here's the other thing. The problem with this is we have the 275s where I think we got pretty close to, this thing was probably profitable yesterday. We were down around the 300s, volatility spiking. You can see Vega. Do I have this on here? Well, the implieds are at 85%. No, they're not. Where's my implied? Yeah, they're only at 50%. I would expect this to be higher. I think the problem is we just bought so far of an out of the money put, and this thing's just gone so far. We paid $5.40. This thing's worth $1. What do I want to do with this? I mean, I guess we could sell some calls on this, but I mean, this is pretty much a lost cause. I'm wondering if I should just do show where I update these positions a couple times a week, because this just looks worse than it really has to be. But nonetheless, let's put on some new positions. I'm going to just let this expire. Our paper trading account is down, I don't know, what is that, 5%. So that's pretty shitty. We need to get some winners in here. So what do I want to be playing? Well, first things first, I've been looking at AMD. This thing looks like crap. I really thought, here's the thing. I really like this chart pattern here. This is like an island top here with this like strong reversal formation. This is, I think this is commonly referred to as the Empire formation. Brings back memories. Anyway, I mean, it's hard not to want to play this thing to the downside, but at the same time, the fact that this did not break below its consolidating lows, that makes me a little concerned about taking this to the downside. So I'm actually going to skip that for now. I've got, this is a pharma play. Everything's just kind of like in no man's land. It's really tough to be putting on new positions. I will say that the one thing that I am strongly convinced about is that I think the dollar is on its way back up. So if the dollar is on its way back up, maybe we can play this UUP. We're at 26.31. Maybe we can buy ourselves the 26.50s or the $27.50 calls. Expect this thing to kind of retest these highs, see if we can make some money there. So let's go price those out. Trade UUP. Let's give ourselves until, I'll do July, give ourselves a month. The $25 calls are too much. Wait, are they only? Oh, wow, this is like a synthetic position. The $25 calls are trading at, yeah. What, you don't like that idea? Come on, the dollar is going to get stronger here. The Fed's going to support it. What's that?
You've got to listen to Mini Bear. If Mini Bear starts grunting, you can't take the position, man.
I don't know. I can't really tell the difference between her being upset about it or her being excited about it. Because it makes sense, doesn't it?
She just wants to go to the moon. Don't we all?
She wants the moon. All right, so the $25 calls are priced at $1.32. I mean, this is about as close to a synthetic as you can get. I'm going to buy this thing. Let's see. So we're doing, what did I say, like $2,000 positions or something, trying to keep this at 1%. So We could do like 18 of these, and then we're probably going to be bidding in the middle to get filled. So you guys should try to get closer to the bids, but I'm going to just, I guess I'm going to hit at 135. Ooh, this is too much. So let's edit this. I guess my math is off. Let's do 15. There we go. That's pretty close. Let's send that, and we're filled. I like that. You know what? The other thing that we could do is, if you want to play this another way, the other position would just be to buy the underlying. So I would be buying, let's call this 1,000 shares, confirm. You know, that's just to get the underlying shares purchased to play the upside. So I bought those, and then what I would also do is that I can sell puts down below. So I'm actually exposing myself in 3 different ways. I don't want all of these positions to be on, but I'm just putting them on to show you that I can sell, let's say, the $26 puts. Right, so that's just assuming this thing continues to go higher. $26 puts right now. You can pocket about 22 cents. So I've got 1,000 shares, which means I can buy 10 contracts. So I'm going to sell 10 of these at, I'm just going to hit the bid, 21 cents. I'm going to pocket $210. Woohoo, big deal, right? It's kind of crazy, right? You're going to pocket just this income. All right, let's do that. This is another way you can do it if you're interested. The other way is you can just hedge it out a little bit and sell, you can buy some puts. If you're worried about these positions, you can kind of buy the, what would I want to be buying? Probably the 2650 put. So this is like 4 different ways to playing this. Right now I'm playing the 3 times, I'm going for triple, right? I'm buying the shares, I'm hoping it goes up. I'm buying the calls, I'm hoping it goes up. I'm selling the puts, I'm hoping it goes up, right? I want this to expire over $26. All right, so I'm actually going to keep this position on just to track it. You can't put this on this way, otherwise you're exposing yourself to way too much risk. Again, so if I wanted to hedge this out, I would actually be buying some puts down around the, I don't know, like the $25 puts, right? If this thing really wanted to collapse, call it the 25.50. If this thing wanted to break below this level again, you can hedge it out by doing that. All right, so that's the dollar. And then the other thing that was interesting to me, let me just run through it here. SLV, we've closed that out. I think this is actually on the way down, right? If we're gonna go along with our dollar narrative, the other way that you can play this, right, is if you don't think if you do think the dollar is going to go up, theoretically you should see gold and silver go down. But if you want to hedge this another way, it's kind of a wonky way of doing it because theoretically these two are going to trade in opposite, dollar up, gold, silver down. We could buy SLV to the upside to hedge that dollar position, but I don't like, I'm not going to do that. That's just one way of doing this counter trade. It's almost a hedge fund like, if you will. But I think that silver has seen a double top. You can see this MACD divergence. I think the writing's on the wall here. I think this needs to come off a little bit. So what, silver's trading at 1627. Let's go look to put on some silver puts. Let's see, July I think is not enough time. I'm gonna buy the August. What happened here? Did you drop? You've got to go in 15? Okay, I will finish this up here. The July $16 puts are bid 51 cents. It's probably a little too much. The $15 puts are, those are only trading at 20 cents. I kind of like that. $15, those are out of the money. This thing would have to go down, retest that 38.2. I mean, is this weakness on, look at this. This came right into our profit objective and it's just on its way down now. Let's see. I think we should go with the 16s. The $16 puts are 51 cents. If this thing does go down to $15, we're going to get a double on the position if it happens soon. And then, yeah, let's go ahead and do that. So let's buy single 51. We're going to put on, I guess we can put on, what, 30 of these? 30, call it 40. 40 of these things will be $2,000. All right, let's do that. All right, so we're filled on our silver put. Oh, fuck, I did the Julys. Damn. I bought this 51 cent. All right, I'm playing this into July now. I'm hoping this thing can come off. I mean, look, the double top is almost in. Do you wait for these moving averages to creep back up before you take the position, waiting for it to absolutely fire on a technical basis? You could, but I've seen the RSI top out. We're seeing the weakness across the market. I think we could have a liquidity event if the market does sell off. You're going to see all these things take a beating, including gold. So we've got the UUP, we've got SLV. I've got some positions on, I wonder if we should short Ford again. I've already got this position. This is where I took the position. I mean, talk about timing the market. I got really lucky there.
Ka-ching.
Yeah, that thing went from, I paid 14 cents and I sold some at 52 cents. I sold a third of the position, 2/3 of the position, sold a third at a triple, another third at 52 cents, and I've got another third on the books here. I don't know. I kind of like repositioning a little bit higher. I don't think we're just going to cascade downward. The fact that we're pausing a little bit today makes me think that maybe we need to cool off a little bit, and maybe things need to just kind of like trap retail a little bit more. That's certainly possible. I'm going to set some working orders on the VIX in the trading account in this thing. I really like going long the VIX. I think we're going to come back down a little bit. I'm going to buy the July $30 calls, but I'm not going to pay $7.50. I am going to try and pay, right, we're going to buy 10 of these is too much. We're going to end up buying, well, let me just see. So this will tell me what it expects the VIX price to be. This thing says that at $7.50 it expects the VIX to be $32. I don't think that's right. I'm going to put this down. I think this can come off down to about 30. So if this is expecting the VIX price to be 30, I'm going to make this 550. This is telling me 29.51. Yeah, that's the problem, right? So we've got all these other variables coming into account because I'm accounting for the June contract. So let's put this in. You know, these moving averages look like they're crossing. I love when moving averages get retested. I really don't think we're going to fill in this gap, but it's certainly possible. So let's put in a bid at $6. You know, that's like $30. We're going to buy 3 of these, around $1,800 cost. And we're just going to work our orders. I'm going to work the orders in this paper trading account and hope it gets filled because I really do think this thing's going to continue. All right, this is getting long in the tooth here. I don't have any really cool ideas other than the most obvious. So let's move to crypto. Tell me about your you don't do Galaxy, you do Hut 8. How is excuse me.
Yeah. No. Yeah, Hut 8. Well, to be honest, I mean, Hut GLXY from a price, like I suppose price discovery point of view, they more or less do the same thing, but one's usually delayed and one usually moves quicker than the other. So, I mean, if we look at Hut at the moment, we're at 140. If we compare that to BSing, should screen share, shouldn't I? Am I screen sharing? Hello? Yeah, sorry. I'm past the point of drunk now, if I'm honest, mate. I've had while you were chatting away, I got quite a few whiskeys down me. Anyway, so yeah, you got to enjoy your Fridays, guys. Look, enjoy your Fridays. You've only got one life, and Fridays are essential. So, yeah, I mean, if we look here, more or less, usually it follows price. Sometimes it's a little bit late, sometimes it isn't. At this point, it looks like that Hertz has moved quite a lot further down. The reason I believe this is that Hertz have come out and I believe they're going to be basically releasing more shares to pay for more updated equipment. And I believe the price is and they've been able to raise that around $1.45. So that's the reason why you've got the step down here is basically because of that. So Yeah. But then, I mean, in general, at the moment, I'm not in the position. Usually, with her is a great play. For anybody who doesn't know, it is a great. I mean, if you more or less understand the price action of BTC, it's a great play. I wish we had the historical because before it wasn't on the TSX, so that's why you haven't got much historical comparison. But usually, I literally just go. I get into it anywhere below 80 cent usually, and then I wait for that opportunity, and then usually it usually moves up because with BTC at the moment. So, I mean, if we start getting prices over the next couple of weeks within the broader market going down, then BTC wouldn't surprise me to see it go down as well with it. Within crypto in general, to be honest, Birds, I mean, I don't really follow it too much anymore. In terms of BTC, I've more or less said my piece. I mean, as I said, if BTC goes, if the broader market goes down, then BTC is more or less going to follow. I honestly can't see BTC trying to test. I mean, it's not. Yeah, I think it's a long way away from BTC actually start going into a truly big uptrend or bullish case scenario. It wouldn't even surprise me if it starts washing out. And if the broader market starts going down, we end up seeing that BTC goes below, $7,000 or anywhere at this point. And to really see how much miners can actually handle it, if we start seeing a difficulty adjusting as well with that. So I honestly have no input in crypto other than BTC and the correlation with that and the SPY.
Are you not trading crypto because you opened up a Robinhood account?
If I'm honest, there's just more opportunities on Robinhood. What can I say? Robinhood is the place to be. I've actually never ever seen. Have you ever been on? I've never even seen the Robinhood website. Is it what made retail traders go over to Robinhood?
I mean,
what's the
basically, if you lose your account value, they send strippers and cocaine to your house.
Oh, well, I did hear that they're apparently moving over to the UK in the next month, so don't tell the other half. I'll be straight down there. Ring, ding, ding.
I have used the app before. I downloaded it. I was really thinking about doing it because of the no fees, and it's a really nice platform. The problem is that it's kind of used by Redditors, to show your gain porn, because you can show like a replay of, your gains and losses. The other thing is I've read that they have a lot of issues with data feeds. They do some fucked up stuff. I don't know.
They're like the BitMEX of the broader market. They're just like they as soon. I think the last time when the dump happened at the start of March, it went offline for like 24 hours or something crazy. But what is it? So this is like the degenerate version of Wall Street Bets on Reddit. Have you seen the Wall Street Bets Reddit account? That's amazing.
That's exactly what this is. Exactly.
For the degenerate version. Oh, okay.
No, it's funny if you look at these guys. I actually went to what did I go to in June, like 2 years ago? I went to this finance meeting. It was like about fintech. It was a fintech thing in downtown Manhattan at the Rockefeller Center. And this guy is one of the founders of Robinhood. And it's just like this hipster trading platform. You're cool if you trade on it. And this guy was up there and he had this shaggy hair. He's wearing, let me see if I can find the picture of him from it. I think it was 2018. Or not FinTech.
I still hope he has the same hairdo.
But this is it.
But the difference is you can now have the fuck you mentality.
This is what this dude wore. I mean, this is what these guys do, right? They dress up like they don't give a shit about anything. They're just kind of cool. This guy's wearing some Hawaiian shirt. He's just chilling.
Sandals.
Yeah. Well, he wasn't wearing sandals, but he's just why wouldn't you use Robinhood? Come on, it's free, bro. It's free. That's pretty much what happened. So, look, it's fun. It's free. People don't know that they're getting front run and hosed. I think there's definitely some backroom deals going on that people don't know about. But nonetheless, people are messing around, putting their whole accounts up. It's just, it's fun and games. Anyway.
It's crazy, sad, but someone's got to buy your sells. So
Right. You need
thank you,
someone on
Rob,
the other side of your trades.
the founder of Robinhood. I
Yeah,
salute you.
exactly, dude. So let me give you my rundown of crypto. Have I don't where do I even start? Like, do I go over my old trades? Nobody wants to care about old trades. Um, Maybe there is one good old trade to talk about, and that is on Fed Day. Right around 2 o'clock, anyone who says that crypto is not directly related to stock market and vulnerable to Fed announcements, well, your proof is right here. This candle right at 2 p.m. is exactly the time that Mr. Powell released his statement and went on his YouTube stream with his fake background asking the press or answering the press's questions. This was a wild candle. I had been long going into the Fed meeting, and what ended up happening was nothing short of a roller coaster of an FU move. Where can I get this? Oh, my orange arrow's not going to show up. Come on, really? Okay, this must be it. This was the crazy move. So I'm getting all excited as crypto's on its way up. I've gone long here, and I'm like, oh, okay, I don't need to move my stop. I'm okay. And then, oh no, this isn't it. That was a position that I did put my stop on. That's why I was wondering, why didn't I get stopped out? Here it is. Okay. So I'm trying to remember. This happened, was it like the night before? I'm watching this, and I actually got stopped out of a short position is what happened here. So I got stopped out of my short as this ran up, and I'm really pissed, right? Because it comes all the way back down. I'm like, all right, someone's testing the order book here. Somebody wants to see what's going to happen during Fed Day. And sure enough, I ended up going long into this event here, and I'm really excited. And okay, so maybe I didn't have a stop set, or I had my stop set at 240. I can go into my order book and look, but yeah, so I ended up setting my stop at 240.7, and this thing ended up going down to 242. So I didn't get stopped out, but I'm getting really excited. This thing's running up. It hits 250. I don't even have profit objectives set up on here yet. But as this thing's running down, I mean, these are 15-minute candles, right? So this thing's smashing down after the Fed announcement, comes roaring back up. And I'm like, all right, this is good for crypto. Obviously people are understanding that, if the Fed's going to be providing more liquidity to the system, people are wanting to own crypto. Well, I got overly excited. I didn't sell into this zone. I ended up moving my stop a couple times overnight last night. And at the end of the night, I got stopped out at 246 actually. 236, right? So I had a short. I moved it from 236. I should have been taking positions. Like, I left so much money on the table by not taking any profits down here at 225. I'm really trying to get the hang of it because this market just is so much different than what it was even 6 months to a year ago. So I have to be better at taking profits. And that was one of my big mistakes here, is that I'm long from here. And did I take profits? Where did I take my losses? I had a long position going into Fed. I got stopped out of the position on one of these candles here, and then I ended up going short at the end of the night. Wait, was this Fed? Now I've confused the shit out of myself. So I'm long into the Fed. I ended up getting stopped out as I'm trying to bank profits. And then as I see, oh, this is what was happening. So as I'm seeing, it seems like a lifetime ago, by the way, Wednesday. It's really so much. All right. So I'm long into the Fed. I moved my stop up to 246 after this whole bullshit thing happened. And I think into this level. So I'm like, okay, I'm going to try and sit in the position. I move my stop to 246. I get stopped out here. And then I'm watching the broader market. I guess this is into Thursday. So today's Friday. So into Thursday, I'm watching this thing going nuts. And I'm going, okay, it looks like this market's on its way to collapse in the overnight. So this is what happened. My daughter woke me up, and I'm like, oh, I need to go and see what's going on in the market. I see the S&P futures are down big, but crypto hadn't collapsed yet. So what I did is I put on a short at 239. So my 239 short is in this area here. I must have shorted either on this candle here, one of these two candles. So maybe it wasn't in the middle of the night. So it must have been 9:30. But I remember watching this thing look really weak. All right, anyway, I put on the short from 239, and I'm sitting in the short. I'm getting really excited right around here. Yes, thank you. My banker calls me, and he starts bullshitting with me, and I get distracted. I didn't sell in this area. I didn't even have orders working to sell. You know, you're seeing the stock market cascading down. I'm expecting this to hit a fib level of like 218, I believe, before I changed all my fibs around. But nonetheless, what ended up happening is I set an order to stop myself out at 236 into the overnight last night. I ended up getting stopped out, so I left a bunch of money on the table as the message at the end of the day. Sorry that was so convoluted. I had two different positions going in the last 48 hours. Combined with stocks, it's like I don't even know what I'm talking about at this point. But what's there to do now? I've put on a long position again since this morning after getting stopped out. I went to go take a look at the market, and you know, here's like the 9-10 o'clock open. I had orders working. I think I'm filled. I had 235 as my bid, so it looks like I got filled. My stop is going to be down around the 232 level. I mean, that's probably going to get hit, but I assume we need to at least hit the 61.8 level, maybe try to punch up, because let's see where stocks closed for the day. If we ended up rallying a little bit, I think that'll give crypto the mustard it needs to get up a little bit. That's how I'm playing this. I'm really just looking for a short $4 move here, $5 move into that 240 area, and then I'm going to take profits off the table because things are just nuts. Like Ethereum, if you take a look at the daily compared to Bitcoin, this thing is simply just retesting the neckline breakdown. And you know, things are overbought. I think we need to come back down. 225. I mean, look, I really should have sold there. I just kicking myself. This is just bad trading on my part. I was really paying too much attention to the stock market, which was dumb. But that's just what happens when you don't automate everything. Anyway, what else was I going to do here? So if I'm long in the short term, I have to take a look at these necklines and look for opportunities to get short if the stock market is going to sell off. But I'm probably going to be hands off into the weekend. You know, we know weekend trading is not so. I want to enjoy my weekend. I don't want to be glued to this thing, because if I'm going to get chopped around, there's nothing worse than, you know, having 3 different positions on and losing 5-10% on each one because your stop got run. That sucks. So I'm going to leave this position on to get closed out at 240, and then I'm just hands off until either Sunday afternoon, which may not be possible. Don't tell my wife I'm doing a surprise birthday party for her tomorrow.
Oh, nice, man. Nice.
Yeah, so that's why I don't want to pay attention.
Don't tell me anyone.
Yeah, don't tell anyone. Willow, shut the hell up. Don't tell her. That was dumb. All right, so let's go into Bitcoin and just take a look. I think the issue here with Bitcoin is that we have sort of triple topped, right? It's funny, I've like come up with this name for my new venture, triple bottom trading. Well, this looks like a triple top trading. You got 1, 2, 3 tops. I mean, at this point, you know, the market huddle guys like to joke around that there's no such thing as a double bottom. You know, maybe there's no such thing as a there's no such thing as a triple bottom, which is where I got the name from. I don't know. I think this looks like a triple top. You don't have the same internals that would support the rollover. Maybe we just flag here on Bitcoin, which would be really nice, but I don't believe that. I think we need to retest the bottom end of this range. I think the 8,500 area is really what would be the most obvious for me to look at in terms of a profit target. How do I get rid of this thing on the left? I'll figure that out later. Okay, so let's just take our fibs and take a peek and see where that would be. And this is simple. I'm going to take that as the low. Yeah, 78.6 is right around those lows. And then if you take the entire range, this is 23.6. I think we need to go back down into these levels. If not, you know, you've got this trend line, which is kind of holding the market at this point, which is really interesting. Look, I'm giving you both sides of the view. I mean, you can't really predict which way Bitcoin is going at this point. That's why I'm taking that short-term long position, because I'm just looking to clip a little bit on Ethereum. I assume the same thing can happen on Bitcoin, but I can dive into that in a second. So where is my toolbar? It's disappeared on me. Here it is. Okay, so I'm looking at a trend line kind of along these lines. It's interesting that Bitcoin's kind of stuck right at the breakdown area for where we would lose that trend line. The other trend lines that I'd be interested in following are these, like this to here. That's another trend line that I would like. And if we do end up hitting that, look, that's right into that 8,500 level. If stocks sell off, run for the hills. There's no doubt in my mind at this point that regardless of the fundamentals for how strong a case Bitcoin should be for anyone to buy it, the liquidity event still exists and the risk still exists there, that people are going to look to take liquidity out of Bitcoin to cover their stop losses, to cover their margin calls, whatever the hell it is that they need to raise money from. Nothing's really immune like we saw back in March. And I'm rambling here, so I apologize. But I am looking for this thing to break down. I think we're kind of rage bound. And you can draw a triangle if you want, or your flags, whatever the hell you like to draw. I mean, look, this is really what I'm seeing here. We're pretty close to a resolution. I think if this does break down and we hit that 8,500 level, we're going to see the stock market breaking down too. Where would Bitcoin go in that case? Look, I think 61.8 is too low. Everyone's got these like crazy low price targets on Bitcoin. Look, if there's a flash crash in the stock market, and create a number to the downside and it might hit it. But these are the two channels that I'm looking at. Between these two trend lines, I think this is probably a realistic place for this to settle down at. I mean, look, just to retest the neckline of the breakout of this market structure bottom here, that's like 7,500. That's probably where I see this thing going also. The other thing that I'm looking at is like, there's some fundamental screeners to look at with miners, and the difficulty and the amount of miners that are coming onto the network is bullish. I mean, I really like Bitcoin long-term fundamentally, but short-term, I think we're in a tight trading range. In fact, I think this is a wonderful range to be trading. If I were to play this thing short, let's go down to a 4-hour chart just, to take a look at potential areas to be shorting this thing. I think taking shorts off this, let's do the same thing that we would on Ethereum. Just go doink to doink, 61.8 to 9,600. We're at 9,400 right now. I mean, I'd probably be looking to go short 9,800 to 9,600 if we can get that high. And my target really would be that 8,500 level. I mean, if you want to kind of like add to the short on the way up, that would make sense. I think we might get opportunities to short this thing into Tuesday of next week as this kind of gets its act together. Yeah, thanks, Ryan. It's interesting. I really like these trade ranges. I like this sideways price action. I like that Bitcoin didn't make new lows outside of the end of May. That's encouraging too. I don't know. I don't really know what the rest of Twitter is doing in terms of, is everyone short? Is everyone long? I don't really care what they're doing. But if the census is short, then I would be really, really, what's the word? I would be skeptical. Whatever these guys are doing, just do the opposite. It seems to work out well. I mean, that's kind of it. I took a lot of my altcoin positions off the table. I had, what's it called? This Tezos crap that I had bought. That I've sold before the sell-off. I got really lucky getting out of that thing. I ended up selling it because it gave this warning sign. Let me see if I can bring this up. Coinbase, XTZ. So the crazy thing about Tezos was that we got this kind of warning shot. I think that was here. So I had bought Tezos at about 270, right when it broke out here. I did not sell. This is like a trend with me. If you remember my staying position, I'd like 8x'd my position and I didn't sell. So I seem to have an issue taking profits. I guess I'm greedy. I need to change that. That's going to be a detrimental quality to have as a trader. But anyway, this thing went up to 312. I didn't sell. But then I saw this thing really sell off and hit this 290 area. I got spooked right around the weekend. I ended up selling. And then what happened was I bought into this area on a Sunday, I think it was, or Monday, whatever. And I'm like, oh, this actually looks like a great place to be buying on the lower time frames. I bought it, and then into Fed or whatever the madness that was happening with Ethereum when it sold off, and it did its washing machine, which I tweeted about also. I was like, okay, something's happening. I need to get out of this thing. I ended up getting out at like a slight profit or break even, whatever it was, into this area. And I ended up selling most of the position, which I'm really happy about because this thing, you know, for all intents and purposes, came into a buy zone at 61.8. Should I have been buying this thing? I don't think I can, right? Because if we're looking for things to go down in the stock market, which would in turn impact Bitcoin, which would in turn impact these altcoins, you have to be very skeptical of holding any serious long-term positions here. You know, it's a little late to be selling off your positions, but it would certainly make sense to be pruning them into any kind of upside moves, just in case you get that cascading sell. So, I mean, that kind of covers it because all these coins are doing the same thing. I mean, EOS is up 3, you know, there's no real standouts. ZRX is trying to do something, but look, this is just a, this just looks like crap. Oh, did it blow off again? Wow, look at that. I don't know what the allure is. It's a pump and dump to me. All right, that pretty much is my roundup here. Jamie, I had a good time with you. 407, you said you got to go. Are you ready to sign off, the two of us here? Or did you already leave?
Sir, of course.
Okay.
No, but I'm always here for you, sir.
All right. I think I wrapped it up. I don't know how useful this was. I think we put on some positions. I talked about my Ethereum long. We did some VIX longs. We did some dollar triple exposure to the upside. Remember, please don't expose yourself that way. If you want to expose yourself in public, it's probably safer than the trade that I put on there. So keep that in mind. But this is pretty much a wrap for us. I really liked what Jamie had to say. You know, without you, it would just be me rambling. But you actually tie together all the important stuff for us. So thank you for that.
We both know that's a lie. I don't even know how I sound because I get too drunk now. I probably should go to rehab for a week or something just to sort it out.
You sound great.
But I enjoy the whiskey.
Yeah, I need to get myself some whiskey to join you. Next Friday, I'm around for another show. And then I think for the next couple of weeks, I'm going to Boston, to Cape Cod to do a little vacation.
Nice.
We rented out a house for 2 weeks. And it's like a whole...
Chill, buds.
Yeah, man. Gonna do some lobster.
Enjoy yourself.
Gonna buy some wine, some beer. Gonna go stupid. I don't know if I'll do a show. I'll try to figure out if I can get it to work.
No. You're not doing a show.
I want to do it.
No.
I want to do
well,
it.
I don't care. No, it's not happening. Go smoke a doobie on a beach, chill, get some green, and just enjoy yourself, mate. Sometimes it's get rid of your laptop. The best thing to do is just to not be in front of technology when you do those type of holidays. So I don't even want a text message from you.
Really? Even if we just do one show just for one day? Oh.
No. It's not happening. We can discuss it next week. Right. Well, in which case, I have a curry waiting for me. Oh, good curry. So I think I'm finished here. So
all right. Well, then let's sign off.
Yeah. I think we said it. Yeah. I mean, we basically know. You know, in case it's going crazy over the next few days, expect a dump. And then crypto-wise, yeah, crypto. So, it's probably the worst ending ever. But yeah, mate, I'll catch you on the other side. So enjoy.
It was fun. I'll talk to you next Friday. We'll get this thing. I mean, we're in touch all the time, but I'll try to get this thing good next week.
No, we'll sort it. We'll sort it, man. That's
all right.
Okay.
Take it easy, everyone. Thanks for tuning in.
Okay, guys.